Good morning, folks. Let's go through the charts quickly, and I'll start with the top left-hand tab, and that's currencies. And let's have a look at where the dollar index is to start with. Always a good idea to look at the dollar index in case you are unsure about the direction of the majors. You can look at the dollar index to give you an idea. Remembering that this is made up of a basket of currencies, including the euro, the pound, the Swiss franc, Canadian dollar, etc. One or two other weird ones like the NOK. But 70% of it is made up of things like the euro and the pound, mostly the euro. And so we can look at this chart to give us a little bit of extra information about the individual major currencies. We've now broken through this downward trend line, unfortunately, seeing as we are short on the dollar in general, and we've moved up into the order block. All is not lost. We've seen a lot of trend line breakouts this year, which turn out to be fake breakouts. So trend lines are becoming less reliable, unfortunately. However, often we just get a breakout through the trend line and a reversal. We've seen it on energies, uranium, oil, gold even. So it's happening quite frequently. It's due to high frequency trading algorithms and just the general breakdown of order over tumultuous periods like elections. So let's see how this goes. We've got lots of resistance above us, including the 200 period Bollinger Band, that squiggly orange line at the top, another order block there. So all sorts. If we do get through this high, however, and that's quite a long way above us still, about 150 pips above us, look at what lies further up. All the way up to about 115, if you remember this trade, the carry trade on the long dollar trade over there. So I don't think we're going to get that again, but we might. So keep an eye on this and be careful. So considering all of that, and I still think that we'll probably see the dollar lose a bit of strength in the coming days or weeks. We're long on the euro and long on the pound. I've had to stretch my position a wee bit and add another tranche there. These are still relatively small positions, so there's no problem. But I would rather have had it turn around at this channel line over here. Let's expand our view on this and go to the day chart quickly on the euro, just as an example. And you can see here we are just dropping through that blob that I had on here. I still think this is the most likely path on the euro, and that we'll find some support into these lows. There you can see our two long positions. We're hoping to find support at this black line down here. Same sort of thing on the pound, and then the dollar yen, for those who are trading this short. Let's have a look at the day chart on this one. We've moved up to the underside of this channel line and testing it now. It's also a big order block. It's also a Fibonacci retracement level. The 786 is just above us at 157. We're now at 155, so that's only 200 pips above us. Hopefully we won't have to get there and we'll turn around at this trend line, but we must now increasingly allow for something like that to occur, and we'll have to consider hedging this position sometime soon. Right, I think you know from my previous video our positions on NASDAQ and S&P. I will link that video at the end of this one. And of course the German 40. You can see our short positions on all three of these instruments, short on the NASDAQ right at the top, short in the SPX right at the top, and short on the German 40, the DAX or the German 30. DAX, we're short right from over there. We've taken several short positions on this one, taking profit at the bottom at the support and reselling the rallies. And this one now I think might have legs to carry on moving down. So we're not taking profit here, having broken down through that triple bottom and just poking through there. Let's zoom in and have a wee look. In fact, maybe we should go to the 4-hour chart for this. Notice that we defeated this double bottom with this last spike down below it. It didn't hold down there, but it has broken that level, and the subsequent candle that we're trading in now is doing the same thing. So on the short-term charts, it looks a little weak. On the long-term charts, it looks like we're topping, potentially with a head and shoulders pattern here. Let me sketch that in for you very quickly, something like this. I don't generally like or trade head and shoulders as a rule, but when they appear, it's always quite fun. So something like that, and then we'd expect to move back down towards this low here at around about 18,200, the bottom of this pattern. So that's the DAX, and we got a good short position on that one. So far so good. We're also short on NVIDIA, IWM, Tesla, and XLF, all of those moving down yesterday too. Right, quickly scooting across to gold. We have no positions on gold, waiting for a bounce or a retracement. I think we could go a lot lower on gold actually, and I've done some projections on this, and I think we could get down to this next second trend line or the 100 period moving average. Notice the 200 period moving average is down here. I think the most likely scenario is for us to drop back 61.8% or at least 50%. I'll be watching the 50% level at 2545, and I'll be watching the 61.8% Fibonacci retracement level at 2485 as well. Failing those two levels, we might have to get to the 786, and that's down at the 200 period moving average and this rising longer term trend line. That's my most favored position to enter gold. Let me sketch that in for you. So either something like that or something like that. So I probably won't be entering gold longs until we get one of those positions. But of course, if we do turn around here, we're trying a little bit, but we've broken the trend line. This is the 38.2% Fibonacci level. Looks like we have actually failed to hold that recent swing low. Let's zoom in, go to the 4-hour chart. This is the swing I'm talking about. You can see we failed there, and we've failed to actually bounce or make any sort of progress higher from this level. So I fear we may have to go a bit lower. So keep that in mind with gold. Watch for reversal candles at those key levels that I've spoken about. Bitcoin adding 7% on every $1,000 retracement on Bitcoin. We've only got 50% on this trade now, having taken most of our profit at the top there. We added on a little bit on the further dip down here yesterday. And I think if we can get further dips down here, that'll be a great opportunity to buy more Bitcoin. The obvious levels here are at the 38% Fibonacci level. That's at 81.2. Then we've got the 50% Fibonacci level at 78.5. And then we've got the 618 at 75.8. So those are the sorts of levels that we could retrace to. Actually, I'm expecting a full retracement down to the previous all-time high, the breakout level at 74.1. I'm only expecting that because the breakout pullback has not yet occurred. Let's go and have a look at the day chart quickly. This is the sort of thing I'm talking about. There's the previous all-time high, the big breakout, a big FOMO rally, and we're going to need a pullback. Whether it's going to be there, 38, 50, 618, or all the way back to the previous all-time high breakout level, we don't know just yet. Allow for a dip down to 74. I know we got to 90, and I know it's a long way down, but this is the nature of Bitcoin and the nature of breakout and pullbacks in general. So keep an eye out for that and don't FOMO into this trade. I think there'll be plenty of time to get in lower, or at least during this consolidation. Same thing with Ethereum. We've got long positions on here. We went a little higher than I expected. Let's go to the day chart. So we did get into that order block. We've still got our long positions on here, quite a nice position, but we must allow for this breakout pullback, just like Bitcoin. There's the triangle breakout. You could use this level, I suppose, at 2825 as the breakout level, or the top of the triangle over here at about 2725. We're now at 3130. So allow for a dip back down there and that sort of move. Like Bitcoin, I'm adding on more on retracements, and I'll be looking to sort of finally add my last tranche on down here somewhere if we get that chance. There is, of course, still a chance that we follow the red path, even though that's been largely negated by the triangle breakout. But, you know, it's crypto, so anything can happen. We don't want to be like those people that got trapped in at around 67,000 years and years ago, who held on to those long positions or started FOMO buying at that level and got obliterated by Bitcoin. It does have very severe and incredibly large retracements sometimes, and you need to allow for full 78.6% Fibonacci retracement, which often happens on Bitcoin. We have no positions on silver. I made a comment on X yesterday that we might retrace a little bit further. This is the path that I have in mind. We have a little reversal candle here at this order block and the 100-period moving average on this day chart on silver, but, you know, not really sort of doing much there. That's a hesitation doji. It might reverse here, but I think we must allow, along with gold, for further dips down to lower levels. We're also long on Palladium and Platinum, and I'm getting a lot of questions and comments about Palladium. I want to show you what this chart looks like, or this instrument looks like in general. So it's always a good idea to zoom out. Let's have a look at the weekly chart on Palladium. You can see we've got this nice rounding bottom at this support level. It doesn't look like a support level because of this big spike here, but it is actually a pretty important consolidation support area that we're trading at right now. We've got this rounded bottom forming on the weekly chart, and I want to point out to you that Palladium often trades like this with these very zigzaggy, spiky patterns. You can see it over here during this last recent period on the weekly chart, and you'll see it on other occasions if you go back in time. It's a very spiky, flighty sort of instrument, I suppose, a little bit hysterical sometimes. But let's go to the day chart and have a look at exactly where we are. We've fallen down into this order block, down to the bottom of this rounded bottom. I did draw that blob in there some time ago and suggested that we may have to reach that or retest that at some point. Well, we've done that now. We've got this big zag down, but look, it's the nature of this instrument, of this metal. And also it's part of the auto industry, basically. So the auto industry has similar ups and downs. Nevertheless, we've retraced back into this order block, the bottom of the smiley face, and the key area that I had highlighted some time back, and we're now watching to see if we'll get a bounce here. I might consider hedging this if we get a daily close beneath this recent swing low, and that's at around 907. I'd probably go for just slightly under 900, something like that. We don't have a full position on this by any means, and so there's plenty of room for us to play around. And if we do get into trouble, in other words, if this drops below around about 907 or 900, we'll simply hedge this and wait for the reversal to occur later on. Same thing on Platinum, really. We've got a long position on Platinum. We took it some time back, got into some good profit, and it's retraced. I'm holding this because I believe this is a good long-term trade. Just like FOMO on the upside, I don't want to be sort of fudded out on the downside, fear and doubt. It's always a danger. You get FOMO and FUD, and they sort of play off against each other. Really bad traders will get both FOMO and FUD. Poor traders will get either one or the other at some point most of the time. And really disciplined and skilled traders will try and avoid FOMO and FUD at all costs. We don't want to get FUD right here. We've dipped down to the order block bottom and the rounded smiley face, very similar to platinum. These two often trade together, although they have completely different uses. They're mined in the same areas and have similar characteristics, I suppose, in the way that they trade with this very zigzaggy sort of pattern. Let's go into natural gas, energies, uranium, oil. Not much to say on natural gas, really. I did quite a long video on this yesterday, which I forgot to upload, which I'm going to do that today later on with Jesse's help. Thank you, Jesse. So that will go up prior to this or after this one, I'm not sure. But I've done quite an interesting video on natural gas, so I'll leave it for that. Look out for that video. And if you're not subscribed to the channel, click the subscribe button so that you don't miss the drop of that video. So basically, I'm quite happy with this. This is a 4-hour chart on the NYMEX, and we did take 50% of our profit here at just above $3. We've dropped down to $2.88. So we now only have half of our long position on natural gas after taking profit, and I'll be looking for a reversal on the 4-hour to add that half back on. This is the 4-hour chart, and as you can see, quite messy here at the top, but that's what you'd expect, just being under a key support area. And if I zoom out onto the day chart, you can see what we're up against. And I highlighted this in the last video. This is a super, super key level. Even though we've made a new swing high, remember we're now in an uptrend, we're making higher lows, and we haven't made a higher high. Apart from this little interim one here, we need to get above that one to make a higher high and get this long-term uptrend in progress. That's why we've had quite a severe rejection here, because the moment we close above there on a daily basis, we will have then performed a trend reversal and turn this into a full-blown uptrend. When I say uptrend, I mean up to about 350, maybe 370, maybe $4, maybe just above $4, but not more than that. I've explained all of that in the last video on natural gas, which I will try and upload today, so please don't miss that one out if you're interested in trading natural gas. We're also short WTI, and no change on that really. Our last two short positions were there, and we're in good profit on WTI, looking for a move below this recent swing low. And once we do get going on that, let's go to the weekly chart. Once we get going through this level, it's such a key support level now. It's actually a flat bottom almost. We have sort of a flat bottom break, and that could propel us much, much further down. If you consider this to be a bear flag, ignore the red channel lines that have drawn in and look at the parallel lines. We should get a move equivalent to this flagpole move down. We moved down from $126 down to about $60, so that's a $60 drop. I don't expect we'll get a $60 drop. That would take us to almost zero, but it could be a long way down. The next long-term weekly support levels are all the way down here into the 30s. So back to the day chart, we're looking for this carry on moving down, break through these order blocks and supports beneath us, and then eventually get that big impetus for momentum on breaking that short-term flat bottom breakdown. Right, now let's go and have a look at some of these other ones. The ZAR, we took a tiny short on actually on this trade yesterday, US dollar South African rand. We've started our little short journey on this so far. That's where we took our short, more or less where we are currently. I'm looking for a move up into that blob. I don't know if we'll get that. I've explained this in many videos before. That's the ideal place to sell. We've started off small over here at this recent swing high and underneath these lows. I do think, however, it's more likely we'll get up into that blob there, but I've now got some skin in this game, or a dog in this fight, as the Americans like to say. So that's the South African rand against the US dollar, or the other way around. We're also long on VIX. We took a small tranche there, dipping down slightly below that and bouncing up a little bit today. The VIX should bounce today if these stock markets carry on moving down. I'm not saying they will, but if they do, we should see some gains on the VIX. We're also long on TLT. We've got two tranches on here, one from slightly above us and one from slightly below us. And I'll do some more thoughts and analysis on this one once it gets moving, if ever. It's become incredibly boring. Right now, sugar, we're long on sugar. We hedged our short on cocoa, looking for an opportunity to resell. This is an interesting chart. I like it very much, actually, still. This is the cocoa chart. It's turned from a very messy chart into quite a technical, beautiful setup. So we've had the breakdown, pullback, breakdown again, second pullback. Often we do get two pullbacks, secondary pullback with any breakout. But whether we'll turn around here at this original triangle, this one that you can see drawn in here, I haven't got it shaded in, or we need to get back inside the triangle, right to the top of the triangle again. That could take us to 915, or we might have to get right back into this order block up to about 97, 98, somewhere around there. I think that's the least likely scenario, but I'm looking at both of these levels, that triangle top 9192 and this triangle underneath at 8600, call it. So our short position is now hedged. It's in a small loss, a very small loss. we hedged super fast after we broke out through these highs. It's always a good idea to hedge earlier rather than later for that reason. And we now have the opportunity to exit the long trade that we took, the hedge trade, to offset the short for a profit, and then reverse using the profit from the long trade to cover the additional risk of the new short trade. That's one of the joys of hedging, is that you profit on both sides of the market, and if you time it properly, you can do really, really well. We still have nothing on coffee. We're still long on corn, still long on cotton, although that's broken down below support, but not down to the bottom. We're forming this range on cotton, above and below the support line. But we have been making higher highs and higher lows up until recently. So there's a higher high, higher low, higher low. And if we can hold this sort of area here, as long as we're above that low, we should be okay. Notice the pivotal red line that we're trading up and down around. We're short on orange juice, long on wheat, although that one's also dropped down, and long on soya. These have been incredibly boring for the last 6 months, really, and I think commodities generally need to pick up some strength at some time in the future, seemingly not quite yet. Well, I hope you enjoyed that video, folks. Please like and subscribe to the channel, and my next video that I make for you will be from Zanzibar again. Speak to you soon.
Trade Forex, see it flash. Ooh yeah, ooh yeah. Chase the numbers, watch them dash. Yeah, stock in hand, feel the thrill.